My name is Nidal. I'm from Irvine, California. The question is Apple. Do you buy, trim, or hold? I bought it at $52. Now it is 62% of my portfolio. Kramer doesn't sell it. Nigerian doesn't sell it. What do you guys think?
Well, first of all, congrats on the gain with Apple stock at 173. Does Steve Grasso sell it?
No, I still own Apple, and you know, he touched on something. The problem is every time you try to trade Apple, you lose. You're never going to buy it, sell it at the top, and never going to pick that bottom. Just think about what this year is going to hold. AR, VR. I know we've been talking about a car forever, but there's going to be something there, whether they work in collaboration with an EV company or not. There's going to be a host of positive catalysts for Apple. I think the stock is heading towards 200. This fits in the value bucket / growth for me. People are going to return to this name. I'm staying in it. I would not like to sell it. He's got an incredible gain. If he wants to trim.
Do you agree? Because, Mike, because Tony Sacconaghi, the famous analyst from Bernstein on Apple, was on our show earlier today on Closing Bell talking about whether a lot of the demand has been pulled forward for a company like Apple during the pandemic with the phones, with the computers. Obviously, we were all stuck at home. Or do you think there's some fresh catalysts like Grasso's talking about?
I think it's always a mistake to sort of bet against, the next thing that Apple's going to drop on us. I mean, anybody who's tried to make that bet, I think over the course of the last 10 years has paid a painful price. I mean, the real issue that I have for Nidal on this is not Apple so much, but actually the relative concentration of the portfolio that he just described having. I mean, 62% of your portfolio is a lot to have anything in. Now, if you owned your own business, that might make some sense, but I think some diversification might make sense. If you're targeting the level that Steve was just talking about, which is about 14, 15% to the upside from current levels, there are other places to put your money where you could have targets about at least as aggressive as that. I mean, there are names like Alphabet, for example, which I think also represent compelling value. Maybe Meta, formerly Facebook, would be another place where on a valuation basis, you could spread your chips around a little bit more. Not because I don't like Apple, but I just don't like having all my eggs in one basket.